Market news now. Global stocks are lower as investors ponder what Donald Trump's victory would mean for the rest of the world. Opinion polls show a close race between Trump and President Joe Biden, though Trump leads in several swing states that are likely to decide the election. Locally, the rand clawed back some losses after tumbling on rising expectations that the U.S. Federal Reserve will soon cut interest rates. Fed Chair Jerome Powell said that recent U.S. inflation readings have somewhat added to confidence that the pace of price increases is sustainably returning to the Fed's target, driving hopes that interest rate cuts are nearing. Yesterday, the rand slipped more than 1% against the dollar as investor appetite for riskier assets waned globally after the assassination attempt on former U.S. President Donald Trump. Looking at the actual markets, all-share index down almost 1%, financials down 1.4%, industrials down 1.5%, and the rand is trading at 18 rand 10 to the dollar. And of course, also trading a little bit fair, I suppose, when you look at it against the euro, and then 23 rand 47 to the pound. To give us more perspective on the markets, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. I mean, you look at what's going on with the financials and in industrials. What's driving that performance?
You know, I think markets decided to overlook the fact that we know that the interest rates might be going down in the U.S. after the comments that we got from the U.S. Fed. It's more a question of digesting reality that there is this possibility that we'll have Trump too. So that gets us to be reminded of his policies. We know that he can probably continue with corporate and personal tax cuts. He can continue to being not too strict when it comes to regulations, from climate change to cryptocurrency, stuff like that. But we are just reminded that we might have tariffs coming in, and those tariffs themselves, they might be inflationary, and there might be some form of indirect tax. And worst of all, you know, the running mate that he did decide on yesterday, this guy particularly is very tough when it comes to the likes of China.
Let's build on that, because I find it interesting that we've got this phrase called the Trump trade. And based on my understanding, it's buy American stocks and ditch everything else. Do you think that this Trump trade is sustainable, or is it too early to tell between now and the November election?
It's too early to tell, but I don't think it's sustainable if I have to put my head on the block, because the reality will be, we know this is a global economy, and it's going to be a question of tit for tat. Whatever they try to do, if they decide to do what they've done before by trying to impose tariffs, then we expect to see some retaliation from that. And unfortunately, some of us will start to who are not directly involved. Because if you start having inflation, the economy, then it's going to be a big problem.
Okay, so you look at the markets all day, most of the days. When you look at the performance of whether it's the local side or the U.S., what is your sense of what is the market's perception versus what is reality?
Perception is that consumers are resilient, but reality is that consumers are not. If you start digging deep into the retail sales numbers that have been coming out, that tells you something. If at the same time you start looking into the data piling when it comes to consumers, it tells you that consumers have been surviving because initially they tapped into their savings that they made during COVID, then they had access to credit. Now they're at a point where they don't have anywhere to go, and we're starting to see that reflecting on their spending going forward. And here we are talking economies that more than 60% are driven by consumer demand. So if I'm right to say consumers are not that resilient as we thought they are, then probably we might have some issues going forward.
Let's talk earnings for a bit. We had the U.S. banks kicking us off on Friday. Yesterday we had Goldman Sachs, and we're awaiting Bank of America and Morgan Stanley. What has been the key takeaway for you so far when you look at the U.S. banks?
The guys continue to make good money coming out of raising debt for companies, and there's a confirmation that things are not that great. And even we had even the G7 nations, they are complaining that their debt continues to go up. The guys continue to make good fees when it comes to trading because of the current market volatility. But those interest income that they've been earning will be starting to buy them, because we expect impairments to start going up.
With that said, then, what is your expectations for the rest of U.S. earnings season? Are there particular themes or trends that you're going to be focusing on?
Given that the forecasts are at a very low pace, you expect the guys to continue to beat the forecast, and we expect to see an increase of anything between 10 and 12% when it comes to the earnings for this quarter.
I want to bring things locally. What's your sense of the South African economy? How constructive are you on it?
So far, we are doing very well. Number one, we know that the issues when it comes to ports are getting to be resolved. It's not going to be an overnight thing. We can see issues when it comes to load shedding, even though others are starting to be skeptical that maybe change the name from load shedding to load reduction. But there's some good progress out of that as well. And I think so far people are optimistic, or people are prepared to give the GNU a chance to see whether they will deliver. So things are not looking that bad for now. And hence, at some point, you could see some of the South African ink stocks doing much better. And even when you look into demand, when it comes to our local government bonds, they continue to be that good interest coming from foreign buyers. That itself is a form of confidence. And the rand might have been volatile, but it's not yet at those ugly levels of above 19. If it continues to hold around this, then probably it might also do well for inflation, given that we are a net importer as a country.
I'm glad that you brought up the topic of inflation. Let's talk about the Reserve Bank for a bit. We are expecting that interest rate decision on Thursday. What's your sense of in terms of rate cuts? Are you expecting only one cut from the Reserve Bank, or perhaps more than that for this year?
If the MPC remember that on Thursday it's a Mandela Day, probably they'll give us a cut. But if they don't and just look into the inflation part of things, I think they'll just leave interest rates where they are, because our inflation is still at elevated levels, and they've made it clear that they're looking more into inflation expectations, and they're happy if it's anchored around 4.5%. And I think we're still far away from that. And probably they might want to see what the Fed does, so that they continue to maintain that interest rate differential between the rand and the US dollar. So most likely they will leave interest rates unchanged.
All right, Makwe, let's leave it there. Thank you so much for your time. That is Makwe Masilela from Makwe Fund Managers. And as mentioned in the conversation, we were waiting for earnings from Bank of America. They've come out stronger than expected, and exciting market participants, especially when they have to think about what the rest of earnings season will bring. In pre-market trade, we're already seeing that share price up about 1%. So we will continue to look at other earnings coming out this week, the likes of Netflix as well. So all of this we'll be paying attention to, so you can focus on that.